We will tell you the 7 assets the rich invest in but the poor don't understand. The last asset is the most unknown asset. So watch this video till the end. Now let's start. Number 1. Private debt and direct lending. An insight into corporate financing opportunities. Private debt and direct lending offer a unique opportunity for wealth generation that may not be widely recognized. Private debt differs from conventional bank loans or publicly traded bonds, as it entails direct lending to companies or individuals, frequently facilitated through specialized funds or platforms. Rich individuals engage in this market by supplying funds to companies in return for interest income and, in some cases, ownership shares. The attractiveness of private debt stems from its ability to offer potentially higher yields when compared to conventional fixed income investments. An affluent individual may consider allocating capital to a private debt fund that provides loans to mid-sized companies that face challenges in obtaining bank financing. These loans have the potential to generate annual returns of 8 to 12%, which can greatly exceed the performance of government bonds or traditional savings accounts. Number 2. Private equity investments. Unique ownership prospects. Investing in private equity entails acquiring ownership interests in private firms or transitioning publicly traded companies into private ownership. This particular asset class presents significant barriers to entry for most individuals, primarily due to elevated minimum investment thresholds and stringent regulatory constraints. Affluent individuals frequently engage in private equity by investing in funds that aggregate capital to purchase and enhance businesses. The objective is to enhance the value of these companies progressively and subsequently either sell them for a profit or pursue an initial public offering, IPO. Imagine a situation in which a private equity firm invests $500 million to acquire a retail chain that is currently facing challenges. In the past 5 years, the company has optimized its operations, enhanced its e-commerce capabilities, and strengthened its branding efforts. The company has been sold for $1.5 billion, delivering a significant return for investors. If you want to know more personal finance lessons, subscribe to our channel and also press the like button. Number 3. Intellectual property. The value of intangible assets. Intellectual property, IP, encompassing patents, trademarks, copyrights, and brands, serves as a significant asset class that affluent individuals often utilize to enhance their financial portfolios. In contrast to tangible assets, intellectual property has the potential to produce revenue via licensing or royalties, all while requiring minimal ongoing expenses. An illustrative case is George Lucas maintaining ownership of the merchandising rights associated with the Star Wars franchise. This strategic choice enabled him to accumulate significant wealth through toy sales, books, and various licensed products well beyond the initial release of the films. Engaging in the investment or development of valuable intellectual property can seem overwhelming for many individuals. Safeguarding and capitalizing on these intangible assets necessitates a blend of creativity and innovation, alongside a solid understanding of legal and business principles. Furthermore, assessing the value of intellectual property can be intricate, which often leads to challenges in grasping its actual worth or future potential. Number 4. Business ownership. Creating financial growth through entrepreneurship. Establishing a business, especially one that produces passive income, is a widely recognized strategy for building wealth. Business owners have the opportunity to develop scalable income streams and establish equity in a valuable asset, setting themselves apart from traditional employment. There are various structures and models for business ownership. It could be a technology startup focused on achieving swift expansion and a profitable exit strategy, or it may be a collection of laundromats generating consistent cash flow. Establishing systems that produce income independently of the owner's ongoing direct participation is essential. An entrepreneur may consider launching a software as a service (SaaS) company. Following the initial development and marketing phases, the business has the potential to create a steady stream of subscription revenue while maintaining low ongoing expenses. As the customer base expands, the owner's financial position strengthens, both through revenue generation and the appreciating value of the enterprise. Nevertheless, owning a business entails considerable risks and challenges that must be carefully navigated. It typically necessitates a significant initial investment, a considerable commitment of time, and a broad range of skills. The significant challenges associated with the high failure rate of new businesses and the stress of management can make this journey toward wealth creation quite intimidating for numerous individuals. Number 5. Timberland and Farmland, a sustainable investment for the future. Numerous affluent individuals and organizations prefer to allocate their investments towards natural resources such as timberland and farmland. These assets provide a distinctive blend of immediate returns and potential for long-term growth, typically exhibiting reduced volatility compared to conventional financial markets. Investing in timberland can provide a steady income stream through regular harvests, while also benefiting from the appreciation of both the trees and the underlying land value over time. Farmland offers the opportunity for consistent annual crop revenues, along with the potential for land value appreciation over time. Both options can provide tax benefits and act as a safeguard against inflation. Evaluate the potential of a timberland investment. An individual may acquire 1,000 acres at a cost of $2 million. Over a period of 20 years, they have the potential to generate income through selective logging, while simultaneously benefiting from the appreciation of overall timber stock and land value. By the conclusion of the period, the property could potentially appreciate to a value of $5 million, alongside the accumulated revenue from logging activities. Number 6. Structured financial products, customized solutions for experienced investors. Structured financial products are sophisticated instruments designed by investment banks to address particular investment goals. It is common to see the integration of traditional securities alongside derivatives to create specific risk-return profiles that align with investment objectives. A structured note can provide an opportunity to benefit from stock market growth while ensuring that you receive at least your initial investment back. One effective strategy to consider is the combination of a zero-coupon bond with call options on a stock index. Affluent investors utilize these products to customize their portfolios according to particular objectives, including tax efficiency, downside protection, or improved yield. However, comprehending the risks and potential returns associated with structured products necessitates a sophisticated level of financial expertise. Number 7. Carried interest, the profitable incentive for fund managers. Carried interest represents a performance fee that is allocated to the general partners of private equity and hedge funds. The allocation signifies a portion of the fund's profits, generally set at 20%, irrespective of the general partner's personal capital contributions. This compensation structure has the potential to generate significant wealth for fund managers who achieve success. For example, when a private equity fund valued at $1 billion produces a profit of $500 million, the fund managers would earn $100 million in carried interest in addition to their management fees. The tax treatment of carried interest has sparked considerable debate. In numerous jurisdictions, this is classified as capital gains instead of ordinary income, leading to a more favorable tax rate for fund managers compared to other high-income professionals. Watch the video appearing on the right side to know how you could save money on a low income. The tips discussed in that video will really help you to increase your savings and get rich. So watch that video. Also subscribe to our channel to know more about personal finance.